Hello, everybody. This is Joshua Hayes with your Part 1 stock market wrap up coming to you for. We're not at third, we're going to be going into Thursday. And first of all, I want to take a look at the big leader charts. I want to show you something. Apple has been rallying off a very V like pattern. The first V, I guess you could say, is here. And then it goes V ish here. Then it does a baby V here. Then it does another V shape here. Now it seems to be pulling back normally. But now that it's pulling back normally, you have heavier accumulation showing up. Also, anytime you see a stock sell off for more than 4 days in a row, that's distribution also. Here it was not in 2009. As you can see, the multiple sell days, that led to a bottom. Hopefully this leads to a bottom too, but since it's coming from an uptrend and not from a downtrend like the last one, I truly doubt it. So the heavy volume in Apple to me is a negative and a red flag warning that something's not going to be going right in the NASDAQ anytime soon. To confirm, let's look at the other leaders. Google. Google, once again, as you can see, as it went down to the lows after a long downtrend, it had those 5 days sell-offs in a row. But on its way up, see, even down here, it didn't even have any. But on its way up, look at what we found recently. 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row down. One big update that went nowhere that was followed immediately by a breakdown. So Google is hinting that its run could be over for the short term. Nothing's for positive, everybody. I'm just giving everybody a warning right now of what could happen. Microsoft, you already see all those V's I drew all over it. But the most important one is, let me get rid of all the V's, is just the Grandioso one, the weekly one. There you got that V, and then here you got this V. And that's just not good. You want it to be more like, you know, this. Let's pretend like that rounds out, okay? And this, but you want it to round. And so we're not seeing that in any of these indexes, which makes me kind of nervous, especially whenever Microsoft's rallying on short volume and not doing much. Let's look at another leader, Research in Motion. This stock to me clearly says, hey, something's the matter. So you can see RIM move up on low volume the entire way higher, except for this couple of big tall red bars here. This down day in May and that down day in May. And that then led to RIM now rolling over. And not only has it sold off 5 days in a row, 1, 2, 3, 4, 5 of it was above average. So that's not good, and the volume that's following is on lower and lower volume. So overall, just not good. RIM, Apple, Microsoft, Google, not happy. How's Baidu, my Chinese leader even? Holding up a little bit better, but still, what do you see here recently? Red bar, red bar, red bar, red bar. And how are the green bars closing? Pretty strong there, pretty strong there. Intraday reversal there. Intraday reversal here. Pretty strong there. Not bad. Overall, Baidu is holding up better than the rest of them. And do you know why that is? Because it's a Chinese company. So while Baidu makes its point back to the old highs and wants to reset up, I doubt you're going to be able to get to see this in Apple. Apple, I think, is just a goner. Look at the volume in early 2008 and then late 2008. It's just purely under distribution. Just like a Microsoft chart. Look at the weekly. Look at all the big, tall red bars. Clearly, they're selling it. So that's it for that. Let's hit the indexes. NASDAQ. Very nice day today. Up 1.55%. I believe volume was lower. Yeah, volume was lower than the day before. But it's an up day, Joshua, 1.55%. Aren't you happy about that? No, because you guys, you got to read the intraday charts right. This is a bullish day here on 526. Closes near the high day. This is a bullish day with the tail. This is a bullish day with the tail. This is a bullish day closing near the high. This is a bullish day closing near the high of the tail. This is a bullish day with the tail. This is a bullish day with the tail. Now it all starts to really go wrong. And what you have here now is you have a go nowhere day, lighter volume, no big deal. You have another go nowhere day, lighter volume, pretty good. Then you have an up day. Looks like it's accumulation day, but volume's below average. And look at the wick at the top. It's bigger than the wick at the bottom. Let's see if I can expand this anymore to make it clear. Nope, I guess not. Okay, so let me get up close there. So now you have this. So this is now we've broken down. We know that for a fact this is a churning day. So now we have churning day, distro day 1. Another distro day, higher volume, down over 2.5%. 2. Another churning day, gets up to the highs of days, closes well off the highs, up only 9 points, 0.50%. That's on higher volume, churning day number 3. Next day, another churning day of going nowhere on lower volume. The next day, a small breakdown in heavy volume. That's distribution. Still, it's not a major breakdown yet below the gap up to confirm it's all over. Look, another distribution day. That's now 5 distribution days, including that spinning top, in 1, 2, 3, 4, 5, 6 session. 5 distro days in 6 session. Next day, all right, we got some support. Not too bad. However, look at how off the high it closed. So to me, this is another churning day. This is a complete churning day, closing at the very middle portion of range after being that strong. So now what I have is 1, 2, 3, 4, 5, 6, 7, 8 distro days in 9 sessions. The very next day, going nowhere again. No distribution day, but we're not going anywhere. The next day, up 1%, but look at how we finish. Well off the highs. So that's another churning day. So now let's go back to adding this up. 1 churning day here, 2 distro, churning, nothing, distro, churning, nothing, distro. So as you can completely see, in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 sessions, 10 have been distribution days. And then you have the breakdown. Lower volume, but anytime you break below support like that on huge percent gain, that's a distribution day to me. Today, or the next day, we can't go anywhere. The next day, here we have volume slightly higher than the day before, I do believe. Nope, slightly below, but let's pretend like it's even higher. You have another distribution day, churning day, because it's not going anywhere on the intraday sessions. Opens at 1780, closes at 1792. Pathetic. So what you're looking at here is 1, 2, 3, 4, 5, 6, 7, 8, 9 distribution days in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 days. 9 distribution days in 12 days, everybody. I don't care if it's on low volume or what. That's telling me, to be cautious, be on the sidelines. I went mainly to it in the morning. Some stocks did go up today, but most did not, and it ended up being a smart play. Looking at the NYSE, you got the same thing, if not worse, because now the 50-day moving average is trying to close below the price is trying to close below the 50 and 200-day moving average. The 200-day moving average is holding in. But since it's in a downtrend slope, I wouldn't expect it to really hold. I wouldn't get too bullish there. S&P 600, same thing. It's very ugly, and it's even more ugly for one reason. It's almost 4% loss. Knocked it down between the possible soon-to-be, not bullish golden cross, but the golden cross breaks down right below them. And now it's moving lower. Now, the only good news is if these things kind of go sideways to barely down for a while, that 200-day moving average is going to flatten out, and the 50 should come back above it and take out the 200-day moving average. It's not Pollyannic thinking. It's called historical thinking. So S&P 400, same situation. Ugly breakdown below the 50-day moving average, trying to get it back above the 50, but the price bar just isn't enough to come back. See, I want to see something like CAST. Like, whenever I went long CAST here, I thought I had a beauty. I thought I had a Chinese huge winner. I'm not going to lie. I thought that I had at least a double in this. And then, boom! What the hell? But now to be bullish again, boom! What? So in 4 days, it's now up 2%. It completely erased it. Had that 3.89% drop in the SP 600 turned into this the very next day, up, 4.1% day, then I'd be bullish. But until then, it's just impossible. For right now in the short term, just to be like super bullish after I was bullish for a while there. I don't have my IBD chart set up because my computer restarted. So I'm going to go ahead and end it there. And I'm going to go back to the NASDAQ and show you what I see one last time. So I was a bull based on this uptrend line holding. It failed. If you don't like that one, I was also a bull with this uptrend line holding. And as you can see, it failed also. Let's get up close so you can see it. There you go. It failed on the breakdown that day. So that no good, no good, no good. And then also from here to here, as you can see, the stock has really moved nowhere. I'm trying to find. There we go. From 1014 to 624. If you bought the NASDAQ index at that time, you're waking up about, I don't know, 8-9 months later going, okay, how much did I make? Up 0.5%, 0.75%. Yeah, guys, this ain't good anymore. I gotta focus on China. China, China, China. That's what I love. All right, everybody. I will talk to you later. Aloha. Back with part 2 and part 3.